Assalamu alaikum everyone, welcome back to another video. I hope you're having a wonderful day. As you know, what I like to do is have a watch list of the companies that I would like to own in the next 3 months and so on. Normally what I like to do is just look at the companies that I own and maybe look at them and see which ones out of these companies are right now undervalued and then or even overvalued and put it on my watch list. You can get hold of my watch list if you would like a copy of it. Just join us on the Patreon account, okay, sign up for whichever, and you will be able to have access to it. All you need to do is once you get it, just click file, make a copy, and then you've got a copy for yourself. And again, if you haven't joined us on the Patreon, if you haven't joined us on the Discord, please do so because it really helps the channel. So what I normally tend to do is I look at all the companies that I own or the companies that I would like to own, and then I'll go to Morningstar. Normally Morningstar is actually quite good in terms of valuations, so I use their valuation and then I give myself a little bit of a margin of safety basically. So that margin of safety comes from a book that I've read a while back, which is called The Intelligent Investor by Benjamin Graham, who was actually the professor of Warren Buffett. And what he talks about is in that book, basically he mentions how important margin of safety is, because yes, you can actually follow this analyst, basically you can do your own calculations, but what if you are wrong? Okay, then you need to have a margin of safety. So what I normally tend to do is if it's technology company, I give myself is a high flying company. For example, if I look at these companies, for example, ASML, or if I look at the Broadcom, for example, I'm up £1,000 with Broadcom. So I don't want to take a huge risk, okay? If I'm averaging up, I need to make sure I get it in the right price. So I will give myself about 15% or 10% or 15% of profit and of margin of safety. But if I'm buying Colgate, for example, and it's down to whatever, I'll give myself about 5%, just in case ever the company, something happens to the company in the future. At least that I've got that 5% cushion, whatever. If my calculation is wrong, or Morningstar's calculation is wrong, at least then I've got that cushion of like 5%, 10%, 15%. So I'm going to share with you the companies that I would like to add to the portfolio. Again, this is like not a final thing. It can change as we go along, because if the markets come down quite a bit and some of the companies that are overvalued right now get into a really reasonable price, then I might actually jump and buy more of these companies. So I might change it later, but for now, this is what I have on my watch list. I think there's only one company that will be new addition to the portfolio, but the rest of them might stay in the way they are. So how does it work? Let me just show you. And once you get hold of it, okay, all you really need to do is put the ticker symbol here and then the price target coming from Morningstar, and then give yourself margin of safety. Okay, once you've done those three things, it automatically tells you whether it's a buy or wait for a bit. So for example, S&P Global is one of the companies that I own. It's currently trading $326 according to Morningstar is 370 is their price, their target price, basically fair valued if you like. I've given myself 10%, okay, because this is one of those companies that has a very high PE, and for that reason I've given myself 10% just in case I'm wrong, right? So my ideal entry price is $333, and for that reason, okay, it's buy right now because it's cheaper than my ideal price, which is basically 330. So right now it's trading 326, but it's 333 is my target. So it's undervalued according to my calculation, and for that reason I can actually add this to my portfolio. Another company that I'm going to look at this next few weeks, and I started buying recently again, is J&J. J&J is basically one of my favorite companies out there. It's basically doing a spin-off very soon, and if you look at the target price, is $164 basically per share, and I've given myself just 5%, and for that reason it looks like it's a buy right now. So I will be buying. By the way, all of these companies that I'm going to talk about today, you will see me buying it in the next few weeks. I will definitely be adding to J&J, I will be adding to S&P Global, and so on. So just basically stay tuned for that if you want to see basically what I do with these companies. Also, if you haven't liked the video already, please subscribe to the channel, and let me know if you have any questions. And as always, please join us on the Discord. That will be really helpful to the channel. ASML is one of the companies that I think, how many have I got now? Let me just share. 8 shares. Okay, 8 shares. So recently I bought 3 more shares because it went down a little bit, and I sold where basically one of the companies I used to have in my portfolio, and then I bought more of this company. Right, 760 is basically what Morningstar is saying the price should be. I've given myself 10% cushion as well. Maybe I should do 15% just in case. You never know. I think I'm gonna do 15%. Even with 15% cushion, right, it's still a buy because 646 has been my ideal price entry, and right now it's only 600. So if the markets come down, maybe if it comes down even basically 590 or whatever, I will be buying, because I need to own at least another 2 more shares of this company. But right now, I think it's my biggest holding right now. There we go, 6% of my overall portfolio. I would like to own 2 more shares and see what happens, inshallah. The next one is Visa, another company I've neglected for a while. 229 is the price entry. I've given myself 5%, so it looks like it's a buy. A product, the other one is the automatic data processing. Okay, $228 per share according to Morningstar. I've given myself 5%, and again I think this one should be 10% because it has a very high PE. So I'm gonna wait at least until it comes back down to maybe 205, even if it comes to 210, because I am actually down a little bit, so I wouldn't mind actually owning a little bit more. So about 5% down right now, not a lot. Okay, next one is Cummins. This company has been absolutely great for me. It pays excellent dividend. It's really one of my favorite companies out there, and I like the future of this company. I watched the CEO basically she did a conference, basically a she did a not a speech, basically she did a, what is it called? Basically, after they reported their earnings, she spoke to the CNBC, and I was watching what basically some of the things that she said in terms of growth side of it, in terms of trying to diversify away from the diesel engines and so on. And so the future looks really good for this company. $256 per share, that's where it should be. Right now, I've given myself 5%, basically 5% margin of safety, and it looks like about 243 is basically where it should be. I am up, let me see how much I'm up. Yeah, about 500, or basically 20%. So I'm gonna wait a little bit more. Maybe I should change that to 10% as well, just to give myself a little bit of a leeway, hopefully in the long run. Qualcomm is one of the companies I'll definitely be buying next week because it's down so much, this company. 140 is the price entry. I've given myself only 5%, $133 per share, but right now it's only 115. I can see this company coming down probably 110 if not 100 in the next few weeks if the markets, if the sentiments continues basically to stay the way it is or even get worse. So it is a buy right now. The next one is Public Storage. So again, I had this company for a while. I think I own, how many shares do I have for this company? 10 shares right now. And as you can see, I'm actually down. Okay, so what I'm going to do is I'm going to add to it as well. So my basically percentage is about 5%. So I'm giving myself margin of safety of 5% for this company, and $326 per share. Again, by the way, don't please use this as a like a final whatever. Like I said, the margin of safety is really good to have, but obviously do your own research. If you have access to Morningstar, if you use interactive brokers, you can have access to it. Or if you don't have it, even if you have a couple of companies in your watch list and you would like me to look into it basically in terms of fair value from Morningstar, I'm more than happy to share with you guys. If you're on the Discord, I can do that easily. If you're not, just let me know as well. I'll see if I can do that for you. Okay, but Qualcomm is basically one of the companies I want to add to. Public Storage I want to add to in the next few weeks as well, because like I said before, I've got about 2,000. Is it 2,000 or 3,000? Let me see how I have. 2,666 pounds that I still need to invest until the 7th. Right, Union Pacific is another company. Is right now a wait for me. I think I've given myself only 5%. So I'm going to wait for a bit until it comes back, maybe $190 per share. It's been there before, trust me. So if it comes down to 190, 180-ish, then I would love to add to it. And then we've got Broadcom. Broadcom is one of the companies I've already mentioned. I want this company to be one of my biggest holdings, and right now it's $544 per share is basically where the price should be. But yeah, so I'm going to wait until it comes down. I think I've given myself 15% margin of safety because like I said earlier, I am up quite a bit. So in terms of averaging up, I don't want to do that. So I'm almost £1,000 up on that, just one stock. Accenture is the next company that I'm waiting, okay, and this company is really good. I like the business model. It's been on my watch list for a long time, but it never comes back down to where I want. Although in the last 12 months it's down about 17%, right? But it's not enough for, okay, I need it to come back at least maybe another 5-10%, but we'll see what happens. $245 per share is where my target is, right? According to Morningstar, it's actually a buy right now, but I'm gonna wait for a little bit because obviously it has I can't remember what the PE is actually. In fact, let me quickly check. Yeah, it has a forward PE of 22, so it's still not cheap, but ideally it would be good to add to the portfolio. So there you have it. There's basically about 11 different companies. Majority of them I own it. This is the only one that I don't own. Again, you have to have a process, especially in this type of market. If you're not doing something like this, then you're not doing it right, genuinely. Because then you're going to buy whenever, you're going to sell whenever, you don't have a plan. So you need to know out of the companies that you own in your portfolio, which ones are undervalued at the moment, and buy more of the companies that you want to buy more of and that are undervalued at that point. So don't just buy it, just make sure you have a process. Is really important. So make sure you got your target prices, make sure you got your margin of safety. If a company, if you know the business inside out and you can predict the future of that business, then obviously give yourself a lower margin of safety. If it's a technology company and you don't know what it does, or you're not too sure, or it's a very volatile company, then maybe give yourself 15%, 20%, or whatever it is margin of safety, and then wait for it. I promise you, a lot of these companies, some months ago, like about a year and a bit ago, they were trading really way more expensive than they are right now. And people were saying, oh, they'll never come back down to these kind of prices, but now they have. And it happens. So just be patient, have a process, stick with it, and make sure that you're buying quality companies that have an excellent free cash flow. If they pay dividend, make sure they have a free cash flow. The dividend yield should be whatever you're looking for. The payout ratio should be very, very low. Okay, you don't want companies that using, I don't know, 90% of their net income just to pay that dividends, just to keep the dividend going. And obviously you will see a lot of volatility. Your overall basically the portfolio, it might be down right now, but the overall trend should be upwards. Okay, so since I started this portfolio, you can see where I started. Obviously I put a lot of money into the portfolio, but as you can see, it's been going up and up. But right now I'm 3% up still, almost £2,000. I've made a little bit of money from dividends and all of that stuff. So alhamdulillah, overall is really good. It's getting there. I'm just going to be patient and keep buying quality companies and make sure I follow my process. By doing this type of things, it will genuinely help you have a clear vision and plan in place to not sell when everyone else selling. And when everyone else selling, that's the most important time. That's the time we should be buying. If a company is like S&P Global, is not going to go away anytime soon. Okay, obviously we can't predict the future, but based on what we've seen so far, I don't think it's going to just disappear overnight. So you just have to be patient, wait for it, and then when it's a buy according to your watch list, then buy more of this. So this is my portfolio watch list for the next 3 months. Hopefully it might change for a bit, but at the moment that's what I'm sticking with. We'll see how it goes, inshallah. Have a wonderful day. Assalamu alaikum.